Hello everyone, welcome to Asitsi Mehta Investment Intermediates. My name is Anand Varadarajan. I am a Director for Innovation and Growth as a part of the group. In this video today, we are going to talk you through one of the most unique offering that we have on our platform, which is called iBaskets. Investing in equities is one of the most important part of the wealth creation journey for any investor. So when we talk about investing in equities, there are various instruments that you can do to participate in equities. You have mutual funds, you have stocks and various other instruments. So investing in stocks becomes a very important aspect as well. So when we talk about investment in stocks, you have to choose what kind of stocks you invest in because you're not buying a stock, you're buying a business. So when we talk about buying a business, that is something you need to look at it from a long term perspective. There are a lot of traditional methodologies by basis of which people invest in stocks, tips that comes from friends and family, broking tips, you read in the newspapers, hear and say. So these are all the ways and modes by means of which you hear about which stocks to buy or which companies to buy or which companies to invest in. But what is most important is to make sure that you build an investment portfolio or you invest in a portfolio that is built on the basis of science and is built in a very structural manner. That is where at Asitsi Mehta Investment Intermediates Limited, we bring to you what is called as iBasket. iBasket is a fantastically well curated basket of stock portfolios, which is created on the basis of the group's proprietary scientific investment framework. The proprietary scientific investment framework at Asitsi Mehta presents an opportunity where we create a certain set of baskets that gives you exposure to companies across various market caps, portfolios which follow specific themes, and also some portfolios which track various asset classes such as ETFs and debt. So now let's try and understand what is our scientific investment framework that we are so proud about. Scientific investment framework is a methodology which participates or creates a portfolio of supernormal companies in two phases. The first phase that we talk about is enhancing safety, and the second phase that we talk about is enhancing return. One of the key principles in the house of Asitsi Mehta Investment Intermediates is focusing on safety and then generating returns, which ultimately gives an investor what we call as risk adjusted returns. So let's talk about these two phases. One is enhancing safety and then enhancing returns. So talking about enhancing safety, what we do as a part of this step is we look at the total set of stocks of all companies which are greater than 1000 crore in market cap. We call it our universe, we call it our complete market universe. So out of the companies that are there which are more than 1000 crore by market cap, we look at what kind of companies are detrimental to our wealth creation process. The companies that are detrimental to our wealth creation process are of three kinds. The first of which is capital destroyers, the second of which is called capital eroders, the third of which is called capital imploders. So once we eliminate these three kind of companies, we will be left with a portfolio of companies which are going to be attractive to invest in. So what are capital destroyers? Capital destroyers are companies which have very bad balance sheets, the financials are all over the place, the promoters of the company don't know what they are doing, there's no competitive advantage, so on and so forth. So practically when you invest in these kind of companies, it is sure to destroy your money. So these are companies that we must stay away. So capital destroyers are eliminated in step one. Then we come to capital eroders. Like the word suggests, eroders are basically companies which are going to look at eroding capital over a period of time. So these are companies also where financials may be good, but there's no competitive advantage. The promoters of the company are not able to figure out how do we improve our purchase power, how do we ride over competition. So over a period of time, these companies may not be a good bet for us to look at it over a long term. So we eliminate in the second step capital eroders. The third set of companies that we eliminate are called capital imploders. So capital imploders are those kind of companies where everything is positive about these companies, good financials, good business model, probably decent competitive advantage. But at the end of the day, these are companies which are available probably at very high valuations. So when you buy companies at very high valuations, irrespective of whether the business is good, you do not have what we call as margin of safety. So margin of safety is also very important, because in these kind of companies, a small bad news or small aberration in the way the companies perform, it could lead into erosion of capital, which could cause short term or long term damage in the capital. So we want to stay away from these kind of companies. So like I said, eliminate capital destroyers, eliminate capital eroders, and capital imploders. So once you eliminate these three kind of companies from the entire universe of companies which are greater than 1000 crores, we are left with companies which are called as capital multipliers. So capital multipliers are companies which eventually are ones which are attractive business model, management is good, they're doing their business well, they have good moat over competition, so on and so forth. These are fantastic companies to invest in. So this is where our phase one of the scientific investment framework concludes, where we are enhancing safety. So we have ensured that the portfolio is safe. Now let's go to phase two, where we're talking about how do we enhance returns. So here we are left with, at the end of phase one, we left with a set of companies which are called as capital multipliers. So once we have companies which are capital multipliers, are all these companies good to invest? Obviously not. So we need to identify which are the companies which need to form a part of our portfolio. So here is where we look at companies which are below the radar or below the market, Mr. Market's eyesight. Okay, so what we do is, amongst the companies which are capital multipliers, we look at certain growth vectors which are below the market radar. There can be interesting themes, there can be interesting companies which are not in the line of sight of the others in the market. So those are the companies we try to identify, those are the growth vectors we try to identify, and create our portfolio of supernormal companies. So we look at capital multipliers, look at growth vectors and companies which are below the radar, and create a portfolio of supernormal companies. So once we create the portfolio of supernormal companies, we buy them, hold them over a long term, and we keep reviewing them on a periodic basis. Once we keep reviewing them on a periodic basis, when we observe that any of these companies have come into the limelight or come into what we call as a market mirage, once these companies come into a market mirage, that is the time we look at coming out of these companies, because the value has been unlocked. There's an unlocking of value that's already happened, and we come out of those companies, go back to the capital multiplier universe. Again, we look at companies which are below the radar, vectors which are below the radar, and then we come back to a supernormal portfolio. So this is a process that keeps going on and on over a period of time, and then we continuously create a portfolio of supernormal companies which the investors can subscribe to and invest in over a period of time. So on the basis of this scientific investment process, like I said, in phase one we've been able to enhance safety, phase two we've been able to enhance return. So once we've understood this process, it's very clear for us that this is going to present certain set of growth vectors or certain set of portfolios which are going to generate fantastic return on a risk adjusted basis over a long term. What are these growth vectors and what are the opportunities we are tracking? Okay, so each of these iBaskets track a particular theme, track a particular trend. So we've sort of identified about 6 different themes that these iBaskets are going to track. The key themes that we are tracking are A, which is digital transformation. That is the opportunity that is going to be present in the digital space, that encompasses IT companies, that encompasses 5G operators, and a lot of other companies which are going to participate in the digital revolution or digital transformation. Second, we're talking about electrification of India, where electrification, power, and other ancillaries are companies which get captured in that. The third thing we're going to talk about, railway infrastructure, which captures a lot of opportunities around bullet train, metros, improvising the railway infrastructure, and so on. Then fourth, we also have defense, which is a fantastic sector. Okay, that is also great opportunity that we're trying to capture. The fifth we have is super dividends, where there are investors who want a regular payout on a month-on-month basis out of the stocks that they invest in. So super dividend is one such theme that we are presenting to you. Last but not the least, any of these growth opportunities that we want to cover, which is going to sort of help India grow towards a 5 trillion or a $10 trillion economy, capital enablers and money, availability of capital becomes an important aspect. So capital enablers that encompasses financial companies, financial intermediaries, and all these companies also becomes a very important opportunity to gather. So on the basis of this, we've created our baskets of portfolios. So our baskets of portfolios are categorized into 3 parts. The three parts in which we've categorized these iBaskets are: first, which is cap weighted or core iBaskets, where we have Ace large cap, Ace mid cap, and Ace small cap. These are pure play market cap weighted portfolios or iBaskets. So that's something which you can take exposure to. The second set of baskets that we have is thematic. So thematic baskets, again, like I mentioned, it tracks each of these growth vectors, where we have digital transformation, we have railway infrastructure, we have power, we have capital enablers, we have super dividends, and so on and so forth. So these are the options which are available in the thematic baskets. The third, which is also very interesting from a diversification or asset allocation perspective for investors, is our debt and ETF baskets. So we have these fantastic set of baskets that are available to you on our platform. So we urge you to go to our website, look up the information that's available, or speak to one of our associates who can take you through the specialty and what each of these products mean to you. Each of these products, we strongly believe, have something for everyone across various different risk appetites of investors. These iBaskets present you an opportunity of systematically and structurally participating in the equity market and also capturing the growth opportunity that's available on hand. So we look forward to having you on board. Please speak to us. Keep watching this channel and this space for more. We'll keep sharing more information about iBaskets and the various other products. Thank you very much. Have a good day.